What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to explain to you why I sold SCHD ETF. I bought this other one instead, and I like it a lot more, and it runs circles around it. It also has a better expense ratio. So I'm going to provide my rationales as to why I sold SCHD ETF. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out SCHD right now. So SCHD is sitting at 76.28. There's nothing wrong with SCHD. I'll probably rebuy them. I absolutely love them. They're not doing too hot against the S&P 500. The S&P 500 is beating them. So sitting at 76.28 in the past 5 years, the growth is up 63.76%. The S&P was up 92.01%. One thing is you don't want to challenge the market because the market usually beats you. Or the S&P 500. S&P 500 is like the Alabama of college football. They're just always there. Everybody wants to beat them. I respect Alabama's football program, and I like their football program because they have good principles. And this is coming from an Ohio State fan, and everybody in the Big Ten hates the SEC. But let me tell you, everybody tries to mimic Alabama. Everybody tries to beat Alabama. That's like the S&P 500. Its year range was 66.67 to 78.23. Day range was 76.09 to 76.38, and its previous close was 76.22. So I'm going to briefly go over SCHD. So their ratio is 0.06%. The fund's goal is to track as closely as possible before fees and expenses a total return of the Dow Jones U.S. Dividend 100 Index. So some of its highlights: a straightforward and low-cost fund offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio. All bonuses. Tracks an index focus on quality and sustainability of dividends. Excellent. That's good stuff. Invest in stocks selected for fundamental strength relative to their peers based on financial ratios. So one thing, 0.06%. That's pretty good. I want to go over what's inside SCHD as well. And again, they have some really good dividend stocks within them. And these dividend stocks increase in price per share over time, which is very attractive as well. So I own Pepsi, I own Coca-Cola, Verizon's in there, I own Pfizer. We'll see there's a few other stocks that are inside of them that I own. US Bank Corp, absolutely, very good one. I am still turned off that they have Ford in there. That's a mistake. I'm sure they'll drop them. I own One Oak. That's another one that I own. I own T Rowe. I own Fifth Third Bank Corp. So I actually studied SCHD and I bought a lot of dividend stocks inside SCHD, and I've been targeting the financial sector because they've been down. They've been trying to keep up with the S&P, but they just haven't. I also own Huntington Bankshares and Regions Financial Corp. I also own Tyson Foods. So the inside of SCHD is beautiful. And I always tell you guys, as dividend investors, look what's inside SCHD if you want to buy individual dividend stocks, because it has a lot of very good dividend stocks inside of it. I don't own Kellanova. That's a great dividend stock. Key Corp, I own them. So just looking at inside, I'm sure they'll get rid of Paramount. That's not a good one. Bank OZK, I own them. I mean, there's Wendy's. That's another one I own. So I'm just going over just really good dividend stocks that are inside it that I own. And I mean, there's just a lot of good ones. And surprisingly, Buckle's a very good one. You know, the jeans company. So just looking inside of these guys, this is very attractive. But I'm going to show you what I sold them for, and I'm going to provide my rationales. But I also want to go over the dividend history. So starting in 2016, here's SCHD's dividend. It was 24 cents. Then 2019, it was hitting 40 cents. And then in 2020, 21, it was hitting 50 cents, 60 cents, and then some 70 cents at some point. So still, there is some good dividend growth with SCHD, which is very attractive. But I'm going to now go to my ETF that I sold it for, and I'm going to explain my rationales. and I sold it for SPLG ETF, the SPDR Portfolio S&P 500 ETF. So in the past 5 years, SCHD was up 63.72%. The S&P 500 was up 91.94%. SPLG was up 93.29%. So in my IRA, I have SPLG instead of SCHD. Now, there's nothing wrong with SCHD, okay? Because SCHD is a beautiful dividend stock, has solid dividend growth, solid stocks in there. And I'm going to just go over a few things with the SPDR S&P 500 ETF, but its market cap is 4.90 billion US dollars. Its year range is 44.27 to 56.06. Day range is 55.89 to 56. Previous close is 55.93. So price per share, it has done phenomenal. Okay, it has grown phenomenal from a standpoint, and it has beaten SCHD. So I'm going to go over them. So their key features, their expense ratio is 0.02%, which is attractive. So the S&P portfolio S&P 500 ETF seeks to provide investment results that before fees and expenses correspond generally for the total return performance of the S&P 500 index. It's a low-cost ETF that seeks to offer precise, comprehensive exposure to the U.S. large cap market segment. The index represents approximately 80% of the U.S. market. It's one of the low-cost core SPDR portfolio ETFs. In the portfolio, the building blocks designed to provide broad, diversified exposure to the asset class. So again, we have some nice things going on right there, and its performance has done very well. So, and again, its holdings right here are very solid. So again, Tesla doesn't have a dividend. It'd be beautiful if it had a dividend. Okay, so you're seeing like a mirror image of the top index holdings. Okay, and the fund's top holdings, they're almost like a mirror image. And again, they have done so well that I had to jump the gun and sell SCHD for SPLG. So again, this is an IRA. Now, an IRA, I want an increase in price per share. I want an increase in dividend growth. I want a low expense ratio, and I want something either keeping up with the S&P 500 or beating the S&P 500. So this was a no-brainer. So I will show you my portfolio in a second, but I want to show you the dividend growth on SPLG as well. The one thing I want to address is they do have a stock split history. That's one thing that they did in 2017. So we're going to jump to its dividend history real quick. So I'm going to show you its dividend growth. So 2013, again, you know, the S&P ones, their dividends increase over time. It may not be as aggressive as SCHD, but its dividend growth is very solid. So 2013, 0.37, 0.45, 0.37, 2014, 0.43, 0.42, 2014 it was 0.50. So it's slowly trending up. And then 2015, 0.56, 2016, 0.47, 0.49, 0.49. Then 2016, 0.60, 2017, 0.46. Then it reached 56, 0.56, and then 2017 you see the stock split, the 4-for-1, and then at 2017 is 0.15. So right here, 2023 it was it jumped up to 0.20, and then 0.19. So the dividend growth is a little bit slower to SCHD, but its price per share has done very well, and its dividend yield is 1.58%. So again, I'm having a dividend hikes, which is very attractive. And jumping to SCHD's dividend history, which I'll jump to, its dividend growth is 3.77%, and its dividend yield is 3.49%. So its annual dividend is 266 versus versus SPLG, which I'll jump to. Its dividend growth is 5.63%, and its dividend yield is 1.44%. So Looking at that, sure, there's a higher dividend yield. Dividend growth is 5.63%, which is not too bad. But again, price per share, it's tearing it up, and it's also has that stock split, which is very attractive. And hopefully it'll do that again. That'd be amazing. But the trends are very good. Don't quote me on that. It'll stock split again, but you're seeing some very nice trends with SPLG. So I'm going to jump to my IRA real quick, which is my IRA, and I reached the $10,000 mark, which is fantastic. My return is 24.97%, which is nice. My all-time gain is 1,198.56. And my holdings right here with SPLG, if I click this, I'm right at $5,143.51. My gain/return was 8.50%. VGT, I've been tearing it up at 61.60%, which is nice. So clicking this, I have a total of 92 shares. So right now I'm rolling. And again, the dividend growth is going to be nice. And I have this in my IRA. I actually have a traditional because eventually my income may not qualify for a Roth IRA. So I'm just going to have a IRA. And I'm going to stick with that because of tax purposes. Again, I will get taxed on that once I take money out. But right now, this is looking pretty good. So eventually I'm hoping I can reach $100,000 with this IRA and be rolling. So I just wanted to be very transparent and show you how things are looking with my IRA and why I sold SCHD for SPLG. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to jump to my disclaimer. I can't guarantee I'm going to have a video for you tomorrow, so I just wanted to do this one. So take care and have a good one. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. I'm very transparent with my buys. I own SPLG and I own VGT. I do not own any shares of SCHD right now. I may rebuy SCHD. I kind of plan on it. But right now, I do own these two ETFs that I mentioned. So if something drastically happens, I would sell them. Right now, I would consider myself a long-term investor in these two ETFs. So again, if you're looking for financial advice, it is best to seek financial advice from a financial advisor or somebody certified to give financial advice. This YouTube channel, again, and I'm doing this strictly for entertainment purposes only and showing you my investing journey through YouTube. So remember, investing in the stock market, ETFs, crypto, any form of investment, there's always a risk of losing money. You can lose money, you can gain money. So it's important that you do your due diligence when you make investment decisions. Take care or decisive investment actions. Take care and have a good one.